Hello, and welcome to another edition of Wealth Management Insights. I'm Emily Thomas, Head of Investing with Impact here at Morgan Stanley Wealth Management. Today is Monday, May 18th, and I'm recording this from our broadcast studios in Purchase, New York. Nearly half of privately held businesses in the U.S. are owned by someone aged 55 or older. That represents nearly 2.9 million businesses, more than $10 trillion in assets, expected to change hands in the coming years. Employee ownership is gaining traction as a business succession strategy, helping preserve company success while supporting positive long-term outcomes. At its core, employee ownership gives workers a financial stake in the companies they help build. This can take several forms, including employee stock ownership plans, or ESOPs, worker cooperatives, and employee ownership trusts. Each structure aims to expand access to ownership and wealth creation. In the U.S., ESOPs are the most widely used structure, so much of today's discussion focuses on them. For founders, this provides a pathway to liquidity while maintaining a company culture, legacy, and independence. For investors, it highlights how ownership models can influence company performance, resilience, and value creation across the economy. Wealth in the U.S. remains highly concentrated. The top 10% of households hold about 60% of total wealth, while the bottom half of Americans hold just 6%. Employee ownership links the retirement wave with the potential to expand access to wealth creation. Starting with access, employee ownership can improve financial outcomes for employees. Employees participating in ESOPs tend to accumulate significantly more retirement savings than their peers, often nearly double. The impact is even more pronounced for lower-income employee owners. Rutgers University found that in 2019, low-income employee owners had a median ESOP balance of approximately $165,000, nearly 10 times the national median savings. Employee ownership extends this wealth-building potential to the broader workforce and can help drive company performance. When employees have financial stake in their business, engagement rises, productivity improves, and turnover declines. Research has shown that ESOP-owned companies experience stronger sales and employment growth, with productivity gains of roughly 5% within the first year of adoption. We're also seeing evidence of employee ownership driving financial returns. Recent analysis of the Stout ESOP Index found that employee-owned companies delivered average annual share price growth of over 17% from 2021 to 2024, outperforming both the S&P 500 and the Russell 2000. These companies have exhibited lower volatility, suggesting a more stable performance profile over time. That brings us to the opportunity for investors and founders alike. Despite the benefits of employee ownership, fewer than 10% of private sector workers currently participate in employee ownership programs. As millions of businesses approach ownership transition, employee ownership is coming further into focus. Employee ownership transactions typically involve specialized financing structures during ownership transitions. This can include private credit and private equity to support ESOP conversions and direct investment in employee-owned companies. For founders, this underscores the importance of planning ahead and understanding how exit options align with financial goals and legacy priorities. For investors, it highlights a growing opportunity set across private markets, with the potential for both financial returns and positive economic impact. Policy support could further accelerate opportunities. Long-standing tax incentives already support employee ownership, and bipartisan momentum could expand access to capital and resources. The bottom line, ownership and how it transitions is becoming an increasingly important lens for understanding long-term value creation. Employee ownership connects business, succession, wealth creation, and private markets. For investors and founders alike, this means looking beyond how value is generated to how it's shared and sustained over time. Thanks for listening. If you would like more information or have any questions about employee ownership, please reach out to your Morgan Stanley financial advisor.